Guys, welcome back to this video. In this video I'm going to do a trade recap. Today is on Saturday, the 14th of September. So I'm going to do a recap of trades that some we took this week, some we missed, but almost all of them were shared in the Telegram group. So like this was on we want to do a trade recap of on 9th. That was on Monday of this week. So what you will note here is that this trading style is very simple. What you need to know is that you need to know how to study fractal, 4 hours fractal highs and low, and if you know even 15 minutes is an added advantage. Again, you need to know 15 minutes order flow. You also need to know basic market structure like the one you just done here, and then you need to know inducements and IDMs. And then you need to know basic supply and demand, and then you also lastly need to know single candle order block for entry. Now I always have my checklist that I go through to ensure that I don't mess up so much, because you know trading you put on your own rules, and if you don't put your own rules you will end up messing up. So in most occasion I use this checklist. We check for external range marked in 1 day, we check internal range in 4 hours. More so we study the 4-hour fractal price action, and then we study the market. We wait for the market to take the 4 hours fractal low or high that aligns to 1 day direction that we trade, and then we also now begin to monitor order flow in 15 minutes time frame, and then we look if there is possibility of taking IDMs in a specific zones, and then we just enter if at least the break of structure was or the order flow was in the second order flow. What I mean is that at least the market has been moving, making higher highs and higher lows, and at least it is not the first one. We do the second one to make sure that we are aligning ourselves with the overall order flow. So the first thing we do is to come and study the market. Like in this case we start from the daily time frame as I indicated here. So this is basic market structure. The market came aggressively, then pulled back, and then caused another break of structure on a daily time frame. So instead of going upward, it went back and took the low that caused this break, which is here. That is why I said this thing is a little bit technical, so you need to know this. Then we have a break, a change of character here on a daily time frame. Then we move downwards nicely. So again the market pulled back such that by Friday we were on that is on 6th of this month. We were on Friday, so the market pulled back. Sorry for that internet interruption. I'm just working on it, just solving it now. My internet is a little bit unstable, so I'm just fixing it right now. So let me just explain while the internet is getting fixed what is happening. I hope you can still see a little bit. What is happening is that if you watch this market, we are having a break of structure somewhere here, then the market pulled back. You need to know if the market pulls back. The market pulled back. After pulling back, then it caused another break of structure somewhere here. So the market broke structure somewhere here, and then after breaking structure it aggressively kept on moving on. So this trading style only demands that we follow what the daily is doing. If the daily is buying, we just need to be buying. If the daily is selling, we just need to be selling, provided we are aligning ourselves to the overall trend of the market. Like in this case, if we were here, we would just be looking for buys, because the day is buying. That is how we get our market structure. So if this was the case, if this was the day, this day we would have looked for just buy. This day we would have looked for again just another buy. Then on this day we would have looked for another buy. Then after this pullback, this was a pullback, so maybe we would have looked for buys and they would have failed, or we would have been wrong. Our stop loss would have been taken, which is okay. And then we would have bought here Actually here we bought, I can remember taking this trade, so we then again caused a break of structure. I'm fixing the internet, guys, so just relax a little bit while I'm explaining this. I'm using my phone to tether, so that's why it's taking a little bit of time, but now we are back. So what I was explaining is we have a pull, a push, a break of structure, a push, a break of structure. There was no push in this leg until we came here, we got a push. Then the following day we bought, then we caused a break of structure, then we pulled down, causing a change of character, meaning that the market is now back to selling. Then what happened? Market pulled back, tapped onto this supply zone that has got fair value gap and high probability order flow, order block, this red candle here that took the high of this, so it means it is high probability. So this tapped on it, and we know that this is just a pullback, like what the market is about did yesterday on Friday. We are going to do that. So the next, if this was on Friday, now we need to know that we are supposed to be selling. Why? Because we mark the external range marked in days. So we come here, mark the high and the low. So if you look at this candle closed bearish red, it means we are supposed to be selling. That is how we get our daily buyer. So we cannot be buying this day. On this Monday we cannot be buying, we can only be looking for sales. So I've already marked my external range marked in 1 day, done. Then I now move to 4 hours and start studying the day in 4 hours. So I've already marked my day. So this is the range that I'm dealing with. I'm expecting this low to be taken, so that is why I am selling, so that I can move with the overall order flow of the market. So this is my daily my daily high, and then this is my daily low, which I'm expecting to be taken, and that is why I am looking for sales. So this candle closes at midnight my time. So this is low, which I'm expecting to be taken. So this candle closes midnight my time, so I'm not trading by this time. So this was overnight. Now this is the first candle that closes on at 4 a.m. my time. I'm not yet awake, so it means I'll be trading in the next candle, which starts at 8, as you can see my time. So I come and now start studying my fractals. So what happens is that the market pushed down and now is pulling back, taking highs. So it took this high, this candle took the high, it means it was still going up. So even if it was still going up, we would have just been monitoring how it is taking high. That is what is called fractal highs and lows. So it pushed upward, and then now it started pulling back because this one low has been taken. So ideally the market is now headed to break this structure. Simple. So what is my fractal low? My 4 hours fractal. My 4 hours fractal is this, and high probability that. So if these two regions, if the market turns back and breaks this high, 4 hours fractal high, this market is going to buy until somewhere here. But if it closes this low, it will keep selling. So the next thing is that it should be closing here. It should be raiding this 4 hours low when it's good for timing, or the time is good, so that we can sell with the momentum. Otherwise it can be breaking it. It can be breaking this low when the momentum has already died and the sessions are almost coming to an end. That is why we go deeper into taking early entries by monitoring. If we've already marked our daily highs and low, we start monitoring the few individual candles. So we monitor that this was a buy, took high of this, so it means it was continuing the buy, and then all of a sudden this high became strong, took the low of this. So this is what I'm monitoring. So it means that the market is back to now being bearish with the daily time frame. So I go to 1 hour and wait for my session to open, which is London session starts. My time, it starts at my time starts at 10 a.m. so you can just check your time to know at what time does London start. So this is my fractal highs. So the next thing is I just wait. As you can see, my time, the session, the new 4 hours candle starts and immediately takes the low, confirming that now we are back to bearish. Now we can begin selling any of this level area here. Even if the market was to pull back somewhere here, we would still be looking for sales, because already the 4 hours has aligned with the daily. So this is 8. Now I take another candle at 9. This is where I would now enter to start doing what? To start charting. So basically I would chart like this. So I go back to 15 minutes knowing that everything has aligned. The only thing I'm now waiting for is to look for entry according to this criteria. So number 3, market takes 4 hours fractal low or high that align to the daily time frame. As you can see, it has already taken this and it has already taken this. This was the most important one for early entries. So after doing that, we go and monitor order flow in 15 minutes time frame and look at possible IDMs where it was taken. Now if you check this market closely, what are you going to see? You are going to see that market broke structure here on 15 minutes. It broke structure up there. Again, it broke structure. I know some of you don't categorize that as break of structure because it is wicks, but I factor that because wicks don't lie. Full body candles can lie, but wicks don't lie. If you want, check on my videos if I've already posted it. We have another break, and then we have what happens here. We have another IDM being taken. This was an IDM that was taken, so I'm expecting this to hold, to break structure. This is week's high, but immediately it turns back. This becomes a change of character. This became a change of character down. This became a change of character down because it didn't hold. It didn't do what it's supposed to be doing. This was supposed to take this liquidity up on this fair value gap and break this high, but what did it do? It tried to break it. I don't know if it broke it. Yeah, it broke it. So this becomes an IDM. So again, we have another break of structure here to the upside, 15 minutes, and then again it came back, took this IDM. This was just an IDM. It was supposed to break this upper one, but what happens instead? It came back and broke structure downwards, which means this becomes the change of character downward. Simple. So it means this became the change of character down. So what happens here in a nutshell? How many breaks of structures can you see? So we already have the first one, the second one. So that means that we are now good to take any trade. So what we will only be monitoring, enter in the second 15 minutes break of order flow. So the order flow has already aligned, so we can enter from this point if the session had opened here, or we can just monitor supply and demand and then look for scope and get the entry. But if you look at this market, the market came back, pulled upward, caused another break of structure, took liquidity here, caused another break of structure somewhere here, came back, took liquidity here, break of structure. These things are very small because this is Asia, and then now we have a rally downward. Now if you come here, there's a break of structure. The market took liquidity on this candle and then caused another break of structure downward. So what happens is this is now, let me remove this line. This is now my session is opening, and immediately you can see that massive move. It means this one should be holding, and if it doesn't hold, it becomes, so I can just, now it is up to this point. This is the order flow that we'll be looking into. This is what we need to buy from here. Need to buy anywhere inside here, but we are aware that this can also be IDM. If we are liquidated here, this becomes the IDM or the inducement. But because of session momentum, we are hoping that we are not going to be liquidated because the market is imperfect, and then we can look to trade from this other sell from here. Sorry, this is supply zone. This is supply zone that we need to sell from, supply zone. So this is another order flow. This is not this is just a supply zone, or you can also call it order flow, where we need to sell from. So the momentum is very huge. This is London open, so we just wait for a pullback inside there, and then we can take now. We are now on the last part of the entry. So if you fear, you can leave it alone, or you can wait for this IDM to be taken. But to get precise entry, if this will going to work, we'll go back to smaller time frame of, let's say, 5 minutes instead of 15 minutes. So we wait for pullback. The pullback starts, and immediately you go to 15 minutes. If this order flow is to work, we need to see what is called 15 minutes. We need to see what is called 5 minutes single candle order block scope. So we just keep watching. There's no scope here. If you know, you know. Then the market pulls backwards. There is no scope yet. It would be nicer if it takes this IDM on 5 minutes. It would have been nicer. So immediately we get a push down, so it means that this order flow is stronger. So you just wait for a pullback and take your sales from this point. Order stop loss above this order flow, but just be aware that if this order flow is taken, most likely this will be the stopping point. So you can have this as your stop loss, or just do the risking and know very well that if it is taken, it is taken. So you can have it as 7 pip stop loss, you can have it as 11 pip stop loss, but just be aware that your risk to reward will be jeopardized, and you're going to stay on the trade for long. But this is high probability, so the best one is here 9, but you need to target your trade will take longer to play 1 to 3. And then for somebody like me, I know that if this is taken, this place is going to be the last point. That means even if I place it here, the market will wick me out. So there's no need. If it doesn't take this, then I just need to have my 6 pip stop loss and target a minimum of 1 to 3 or a 1 to 4. Because if this was to work, if this was to be taken, it is going to wick me up to here or even up to here. So why don't I just take a risk? Why don't I take a risk and then wait for the market to give me a 1 to 3 or a 1 to 4. So it depends with the movement. Immediately it clicks my 1 to 3, I always trail my stop loss immediately. So what do we do here? The market is supposed to be, we don't always just take at the exact here. That will be an absurd to say like that. You just wait for a small reaction that goes upward and then you enter. If you place a market order, in most occasions some market orders, because of bad stop loss spreads, they won't tap you in. So I always prefer to see the candle close like this, and then I just wait for small pullback. It can be from this point, can be from this point, so it is imperfect. But what I know is that my stop loss has to be above here, so that is why I would have at least 6 pip stop loss fixed. So target 1 to 3 and stick to the 10 trade rule. 10 trade rule says that take the next 10 trades immediately they show up with a risk to reward of 1 to 3, and you're going to see different result. So that is the target. If it closes this, I will take it from above. So we wait and see. So the market immediately pushes down, then I think it comes back again to load more trades. So at this particular point, my stop loss would be here. I don't place my stop loss here because you can be wicked and then the market goes your way. I like halving my stop loss so that I only lose a small amount of money. So if you miss this trade, there's also another good trade here. that took liquidity here, caused a break of structure down. So this was the manipulation. So if you wanted another re-entry, this would be here. Same, you could have taken it. Like in this case, I always tell you, like I said above there, I always wait for just some small reaction. So sometimes you may get that reaction, sometimes you may not get it. So you may think that you're going to have a reaction and then you don't get it, and that is why you get your position. So like in this case too, this is the safest stop loss, 10 pip stop loss, because it can be wicked twice. Alternatively, you can just have it as here, and then you target that at least a 1 to 3, but for re-entry there's no problem. If this was your first entry, then you need to target at least 1 to 3. The market is already aligned to the daily time frame, and that is why in most occasions it will always play with the momentum. As you can see, the market took a lot of time to reach those take profit because of like I said here, if you took entry from this is 1 to 4 already taken from this candle. If you are closing everything from this point, it was okay. If this was a re-entry, that would have been okay to take this 6R, and that is it. So that is a prediction that we gave here on our Telegram, that all XU, this was on 9th, all pairs that are ending with the USD that closed bearish should be selling. So just observe order flow in 4 hours and know if they are ready to sell. The opposite was true. I will also share the opposite trade, and that is how we played here. So that was the indication. This was the indication here. Euro USD already did what is important. Now you can wait for any pullback above and keep selling the market, or wait the low of the current 4 hours to be taken to keep selling. So that was the trade idea that was shared there. Sorry for that. So that was it for that day. So if you want to see the next day, just watch in the next video.